CIFR stock continues to make headlines. On Tuesday, Cipher Mining surged another 55 cents, or roughly 2.7%, to close at $20.89 per share. It even touched a fresh 52-week high of $21.48 during intraday trade, and the strength didn't stop there. In the aftermarket, the stock gained another 21 cents, adding to what has been one of the most remarkable multi-week runs in the entire AI and crypto infrastructure space. What's driving this surge? Why does this breakout seem to be holding firm while other growth stocks are fading? And could Cipher Mining be on the verge of transitioning from a speculative crypto name into an institutional growth story? Let's break it all down. First, let's start with the basics of Tuesday's trading action. Volume was robust, well above average, signaling strong conviction from buyers. The stock powered through minor resistance near the $20 level, turning what was once a ceiling into a new support base. That's exactly what you want to see in a sustained breakout, a stock that doesn't just spike and fade, but one that stabilizes and consolidates higher. CIFR's follow-through after Monday's explosive move of nearly 20% shows that this isn't just a short squeeze or a one-day wonder. It's a momentum continuation, backed by growing attention from larger market players. Every uptick in price has been met with increasing volume, a sign that institutions are starting to lean in. Part of this interest has been driven by Cipher's strengthening fundamentals. Over the past few months, the company has quietly built one of the most efficient Bitcoin mining operations in the world, and now it's rapidly transforming into something much bigger, a hybrid player at the intersection of crypto mining and artificial intelligence infrastructure. The latest operational report highlights that Cipher mined 251 Bitcoin in September, sold about 158, and ended the month holding roughly 1,500 Bitcoin in treasury. Its total self-mining capacity stands at an impressive 23.6 exahash per second, with an average efficiency of 16.8 joules per terahash. In other words, Cipher's machines are not only powerful, they're efficient, and that's a key differentiator in a market where energy costs can make or break profitability. The company has also completed Phase 1 of its Black Pearl facility, a major milestone that increases its scale and solidifies its position as one of the lowest-cost producers in the industry. But perhaps even more exciting is what comes next. Cipher isn't stopping at mining. Through its deal with Fluidstack and Google, it's moving aggressively into the high-performance computing, or AI hosting space, an industry that could redefine its entire valuation profile. Back in August, Cipher signed a 10-year, $3 billion hosting agreement with Fluidstack, backed by Google's participation. As part of the arrangement, Google acquired roughly a 5% stake in the company through warrants and agreed to provide a $1.4 billion lease backstop to support the expansion of AI hosting facilities. That partnership not only validates Cipher's business model, it opens the door for recurring, stable revenue, something that crypto miners rarely have. The market has been re-rating the stock ever since. What used to be valued purely as a Bitcoin miner is now being seen as a diversified infrastructure company that could power both the blockchain economy and the emerging world of AI compute demand. The narrative shift is profound, and investors are responding accordingly. Adding further momentum is Cipher's recent upgrade from Investors Business Daily, which raised its composite rating from 94 to 96. That might not sound like much, but in the institutional world, those ratings matter. Many algorithmic and quantitative funds screen for high composite scores, often entering positions automatically once a stock crosses certain technical and fundamental thresholds. Cipher's inclusion in that 96th percentile club signals to the market that this is a legitimate growth story with improving financial and operational performance. Another important piece here is market psychology. The broader environment for crypto-related equities has been improving as Bitcoin prices hold near their recent highs. But CIFR isn't just moving with Bitcoin, it's outperforming it. That's a sign that something deeper is happening. When a stock decouples from its underlying commodity or sector benchmark, it's usually because the market is starting to price in something new, in this case, the potential for AI hosting revenue and deeper institutional partnerships. From a technical standpoint, the chart looks strong. After breaking out from the $17 to $18 consolidation zone, CIFR ran through $20 on heavy volume and is now testing the low 20s range. The prior resistance at $18 should now act as support, giving the stock a sturdy base if there's any pullback. The next major psychological level is $20, which it cleared cleanly, followed by $25, which could be the next target if momentum holds. The moving averages are all aligned in bullish formation. The 20-day is rising sharply, the 50-day is accelerating, and the 200-day is now turning up, a signal that this rally isn't just a blip. The volume profile shows strong accumulation, with no major distribution days since mid-September. In plain English, the big money is buying dips, not selling into strength. But as always, it's important to recognize what could go wrong. Even the best-looking trends can experience setbacks. The most obvious near-term risk is profit-taking. After a 20% rally followed by another multi-day climb, short-term traders may look to lock in gains, especially if Bitcoin softens or macro headlines turn risk off. Another lingering concern is the potential dilution from outstanding warrants and convertible notes. Although the Google warrants are strategic investment, they still represent potential share issuance, which could weigh on the stock if investors start to worry about future supply. Then there's the broader macro picture. Trade war tensions, interest rate volatility, and uncertainty around global tech supply chains can easily ripple through growth sectors. If the market's risk appetite fades, even strong stories like Cipher could see short-term weakness. That said, the long-term picture remains overwhelmingly positive. The company's fundamentals are improving quarter by quarter. It's expanding its revenue base, improving efficiency, and diversifying beyond Bitcoin. And perhaps most importantly, it's aligning itself with some of the most powerful players in the tech world. When Google buys into your story, the market takes notice. That 5% stake through warrants wasn't a random speculative bet, it was a strategic signal. It said that one of the biggest companies on Earth sees Cipher's infrastructure as valuable in the context of AI compute demand. That kind of validation can change the investor base dramatically. And that's exactly what seems to be happening right now. The buyer profile for CIFR stock has shifted. This isn't just retail traders chasing a breakout anymore. The accumulation pattern suggests funds and institutions are quietly building positions. We've seen the same behavior in other breakout names that went on to become market leaders. Strong volume on up days, tight closes near the highs, and shallow pullbacks that get bought quickly. Heading into Wednesday's session, the key question is whether Cipher can sustain above $21 and confirm this breakout with follow-through volume. If it can, we may be entering a new price discovery phase, one where institutional investors start setting targets in the mid-20s or even higher. The fundamental story supports that. The technicals support that. And perhaps most importantly, the narrative supports that. The convergence of AI, energy-efficient data processing, and blockchain infrastructure has never been stronger, and Cipher sits right at that intersection. So, what's the takeaway for investors and traders heading into midweek? The trend remains your friend. Cipher has delivered multiple technical confirmations, backed by solid volume and growing institutional awareness. The risk-reward at these levels might not be as attractive as it was a few weeks ago, but momentum traders know, strength often begets more strength. Still, if you're looking at this as a long-term story, the focus should be on the bigger picture. This is a company that successfully executed operationally, diversified strategically, and earned validation from one of the largest technology firms in the world. That combination doesn't happen often. As we move toward Wednesday's pre-market session, the market will be watching to see whether this breakout can extend. If CIFR continues to hold above the $20 mark and volume remains elevated, we could see another leg higher before the end of the week. But even if there's a short-term pause, the broader uptrend remains firmly intact. So while the headline today might read Cipher Mining hits new 52-week high, the real story is that this company is stepping into a new era, one defined by institutional confidence, narrative transformation, and operational strength. In short, CIFR's breakout isn't just a chart pattern, it's a reflection of a company rewriting its own story in real time. And as we head into Wednesday's trading session, that story looks far from over.